Welcome to This Explainer. Have you ever noticed that while the global wealth gap just keeps on widening, the way most of us talk about making money hasn't changed one bit? There is this stark, almost invisible difference between the people who are constantly, frantically chasing wealth and those who are quietly building it. Today, we're going to unpack the hidden rulebook of the ultra-successful. We're going to see exactly how they structure their lives, their decisions, and their income to build systems that actually work for them, completely abandoning the traditional trap of trading their precious time for a paycheck.
So ask yourself this: why do the wealthy rarely talk about getting rich? It's a fascinating paradox, right? If you go online today, you'll see an endless parade of gurus who literally never stopped yelling about how to get rich quick. They're furiously selling a dream, usually wrapped up in a heavily discounted online course. But the truly wealthy, they're almost entirely silent on the mechanics of their daily wealth creation. And listen, that is not a coincidence. True wealth doesn't need to scream, it operates quietly in the background. While the masses are distracted by all this loud, flashy advice, the wealthy are quietly playing a completely different game with a totally different set of rules.
Okay, let's dive into this broken formula. For decades, society sold us a very simple, comfortable path. Work hard at your job, put some money in the bank, buy a nice house in the suburbs, and eventually retire comfortably when you hit 65. But the new reality, it's vastly different. Millions of people followed those traditional rules to the letter, yet today they find themselves working harder than ever and feeling mathematically poorer every single year. The frustration is incredibly real, and honestly, it makes total sense when inflation consistently outpaces average wage growth. The uncomfortable truth is that the fundamental financial rules changed over the last few decades, and most people simply didn't notice. But the wealthy absolutely did.
To survive and actually thrive in this new reality, the ultra-successful completely redefined how they generate income. They shifted their entire focus toward building a wealth system. So, what does this all mean? Well, it's essentially a machine that produces money even when the owner sleeps. Think about what happens when an average person clocks out of their job at 5 o'clock. Their income instantly pauses until they clock back in the next morning. But a wealth system? That acts as a relentless 24/7 employee. Rich people simply do not work for money. If your income is entirely dependent on your physical presence and daily effort, you are just trading time for money. The wealthy completely reject that fragile model. Let's look at some real-world examples here. Think about Elon Musk deciding to take a week off to rest. Tesla doesn't suddenly stop manufacturing and selling electric cars. Or if Jeff Bezos unplugs and goes on a month-long vacation, Amazon doesn't suddenly shut down its entire global logistics network. Why is that? Because their massive wealth isn't created by them personally tightening bolts on an assembly line or packing boxes in a warehouse. They spent years meticulously building the infrastructure, the system itself. Their personal, physical labor is no longer the bottleneck for their income. If they step away to take a breath, the machines they built just keep humming along, generating wealth.
When you operate purely as an employee, you're selling your time in a strict one-to-one ratio. The exact moment you stop working, the money stops flowing. Imagine if a sudden emergency happens and you can't work for a month, your entire financial plan immediately collapses. That level of dependency carries a massive unspoken emotional and financial toll. But owners, they operate with a completely different mindset. They construct systems that function totally independent of their daily labor. They're essentially building a moat around their time. Escaping that dependency is what true freedom actually looks like, and it fundamentally changes how you view your workday.
Now, what's really interesting about this slide is what these actual machines look like. A wealth machine doesn't have to be a massive smoke-belching factory or a multinational logistics company. It can be a piece of software, like a monthly budgeting app that people pay a recurring subscription for. It could be a carefully managed portfolio of index funds. It can be a simple duplex in a growing neighborhood that pays your mortgage through rental checks. It can even be intellectual property, like a self-published ebook or a patent that pays out passive royalties for years. The physical form changes, but the core principle never does. Wealth is created by ownership, not just raw effort.
This brings us to another massive psychological shift, this time regarding how things are purchased. A poor or middle-class mindset focuses almost exclusively on price. Basically, can I afford this today? But the wealthy focus on value. What will this be worth tomorrow? Imagine someone buying an incredibly cheap office chair. It breaks in a year, so they buy another, and then another. They end up paying a poor tax by constantly replacing garbage. The wealthy person asks, will a high-quality $1,000 chair support my back for the next 10 years while I build my business? Buying back your health, time, and focus changes absolutely everything about how you deploy your capital.
And this exact mindset is how the wealthy distinguish between assets and liabilities. The average person gets a big paycheck and immediately buys liabilities, things that take money directly out of their pocket, like a depreciating luxury car with a massive monthly loan payment. But the wealthy, they prioritize step one. They strictly buy assets, businesses, stocks, real estate, things that put money into their pocket. Then step two, those assets generate consistent cash flow. And finally, step three, that new cash flow is what actually pays for the lifestyle. They allow their assets to fund the luxury forever, rather than the luxury becoming a heavy financial burden that traps them at a job.
Which beautifully sets up this incredibly famous quote, often attributed to Albert Einstein: "Compound interest is the eighth wonder of the world." Now, whether Einstein actually said this or it's just a fantastic internet myth, the mathematical truth remains absolute. When you buy cash-flowing assets, you unleash compounding. Imagine a small investment that quietly doubles over a decade, and then doubles again and again. Money that earns money eventually works harder and vastly faster than you ever could. Every unnecessary dollar you throw at a liability today is a dollar that can never mathematically compound for you tomorrow.
But compounding isn't just a financial concept, it heavily applies to your focus too. The wealthy fiercely protect their attention from a modern world where every app, news outlet, and notification is screaming for a few seconds of your time. Clear thinking produces deep thoughts, and deep thoughts create expensive, high-value decisions. This is exactly why Warren Buffett spends up to 6 hours reading every single day. It's why Bill Gates historically retreated to isolated cabins for scheduled think weeks, completely unplugging from the noise. They aren't being lazy, they are protecting their cognitive bandwidth, because one crystal-clear decision can outperform a decade of distracted hard work.
Now, you might be sitting there thinking, but building these assets and making these decisions requires taking terrifying risks. The media absolutely loves to sell us the romanticized narrative of the fearless, reckless entrepreneur who bets their entire life savings on black. But the reality? It's completely the opposite. The rich don't avoid risk, but they ruthlessly avoid stupid risk. Starting a business after 3 years of deeply studying the market, that's a calculated risk. Throwing your emergency fund into a random cryptocurrency you don't understand just because a celebrity tweeted about it, that is gambling. Successful wealth builders are surprisingly conservative. They are absolutely obsessed with downside protection.
In fact, what happens if I'm wrong is the single most crucial question they ask. Before they ever allow themselves to get excited and ask what happens if I'm right, they meticulously ensure they can survive the absolute worst-case scenario. For example, they don't just impulsively quit their day job on a whim. They build their new business on nights and weekends until the cash flow is undeniably secure. They build a safety net first. Why? Because survival creates longevity in the game, and longevity creates wealth. If you take a reckless risk and get wiped out, you can no longer compound. Protecting your downside keeps you at the table long enough to eventually win.
This protective, long-term mindset also heavily dictates how they network. Today, people are obsessed with collecting superficial contacts, obsessively gathering followers, counting digital likes, and treating networking like a quick transaction. The wealthy focus entirely on building deep, enduring relationships with trusted advisors, mentors, and experienced partners. A strong professional network compounds just like money does. Genuine trust and a sterling reputation cannot be bought, and they certainly don't happen overnight. Many billion-dollar systems weren't sparked by a viral, attention-seeking post. They were meticulously planned over deep, quiet conversations behind closed doors with people who had mutual respect for one another. And you know, when you stretch your timeline out to decades, your day-to-day behavior completely changes. Most people are operating on a microscopic timeline, just desperately trying to survive until Friday. Their decisions are understandably based on the next few days. But successful wealth builders, they're making decisions today based on where they want to be in 2035. When you adopt that kind of extended time horizon, you instantly stop chasing overnight trends, you stop panicking and selling everything when a news headline screams about an impending market crash, you recognize the chaos as just a tiny blip on a much longer journey. Which brings us to the climactic secret of this entire explainer. Listen, money itself comes and goes. Markets will always wildly rise and inevitably fall. But what actually remains when the dust settles? Your acquired skills, your proven character, your compounding reputation. Real wealth is rarely just about making a giant pile of cash. It's about fundamentally becoming the kind of person who is intrinsically capable of consistently creating value over time. The free market will always, eventually, reward someone who can solve a meaningful problem for others, no matter what the global economy happens to be doing on any given Tuesday.
So I will leave you with this final, provocative question. Are you playing by the right rules? Now that this hidden rulebook is open, showing you that true wealth is about aggressively building systems, buying assets over liabilities, fiercely protecting your attention, and thinking in decades rather than days, you have to honestly look at how you're spending your time right now. Are you just trading your precious hours for a paycheck? Or are you ready to start building your machine? Keep mastering these fundamental principles, because the way you play the game is entirely up to you.